Is PoleStar stock a buy after spectacular Q4 earnings? I'm going to answer that question in this video, but first I'm going to review PoleStar's fourth quarter earnings results, and then at the end I'll answer the question if it's a buy or not. So let's get right into it. So revenue surged to 985 million in Q4. That was up 67% from the same quarter last year. Operating loss improved to 204.7 million. That was down from 337.3 million in Q4 2021. This is what I want to see from these companies. I want to see their operating losses, their net losses, their gross margins. I want to see these improve as they ramp up production, which not every EV company is demonstrating right now. Vehicle deliveries of 51,491 in 2022 was an increase of 80% from 28,677 in 2021. So a very nice ramp up in production. Here's what impressed me the most from Polestar's fourth quarter earnings results was that gross profit margins improved to 4.9% in 2022, up from just 0.1% in 2021. So a dramatic improvement in the gross profit margin in 2022 from 2021. The company is forecasting 2023 volumes to increase by 60% to 80,000 units, a significant increase from the previous year. However, this is what I found disappointing from the 2023 guidance from management was that they said that the gross profit margin in 2023 is going to be very close to the gross profit margin in 2022. I was disappointed to hear that because they had made such nice progress in 2022 from 2021. I was hoping to see some improvement continue for 2023, at least a couple hundred basis points there. But to see that it's going to remain flat, even though the company's going to ramp up production by 60%, was a little disappointing. I thought that they were experiencing nice economies in scale here, but it turns out that's not going to be the case. Now, it's a good time to remind investors that Tesla is the leader in terms of gross profit margins in the EV industry, and Tesla boasts margins north of 25% in terms of gross profit margin. So that's where all of these other players aspire to get to. And so there's room for growth. That's why I was expecting Polestar to show some more improvement in 2023 from 2022. And again, another disappointing fact about Polestar's earnings was that the company will likely need to sell additional shares or enter the debt markets to borrow money because as of December 31, it had roughly $1 billion in cash. But if you look at its cash flow from operations in 2022, that was a negative $1.1 billion. And with the ramp up in production, it's going to need more capital. So it's going to sell more shares and well, I should say it might sell more shares or it might borrow money. Either way, that's not going to be good news for investors in Polestar stock. If it sells more shares, then that's going to dilute existing shareholders when the company does or if it eventually reaches profitability, those profits are going to need to be split among more shareholders. So your earnings per share that you were expecting in the future is going to be lower because the company has more shares outstanding. If it chooses to enter the debt markets to borrow money instead, interest rates have moved significantly higher since last year, and so it's going to have to pay higher interest rates, and that debt expense is going to be a burden on a company that's already losing a lot of money on the bottom line. So either way, not very good news there. And that's why I was hoping to see Polestar improve on the gross profit margin because that would lower its needs to raise capital to fund its operations, right? If each car sold was bringing in more profits, then it wouldn't need to raise so much money or think about raising money to support its operations. So that was a little disappointing in an otherwise excellent quarter from PoleStar. In 2022, it made excellent progress, but it looks like management does not expect similar progress to be made in 2023. It's going to increase volume, it's going to increase sales, but those increases in production and sales are not going to improve its gross profit margins. All right, so to answer the question, is PoleStar stock a buy? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right now, I'm going to say no, PoleStar stock is not a buy right now. I will need to see more progress in the companies achieving profitability or profitability margin improvement. I don't like that management does not expect to see continued improvement in its gross profit margin in 2023. That's troubling because the company is losing so much money on the bottom line. If PoleStar was a company that was already profitable and already delivering robust cash flows and robust profits, then I wouldn't be so concerned about seeing improvements in profit margins. But when you're losing so much money, I want to see that you're improving significantly, that you're making progress, because otherwise I'm going to be worried that these losses are not going to end anytime soon. All right, so that's all I've got for this video. If you enjoyed this one, I'm going to link to 2 other videos at the end of this that I think you will enjoy. So please go ahead and click on those, and I will see you over there.